Well and doing great. In this video today, we are going to be taking a look and addressing a cause for concern. A lot of people are really reminded of what took place in 2021 double top. They're looking at the fractal that we currently see, and it reminds them a lot of what happened. If you remember, March into April of 2021, we saw this really, guys, what is going on with that color? Hold on one second. This is going to be a great session here. CTM Classic stream. So let me go ahead and get ready, get comfortable, and get going. Classic in the fact that, too, like what happened there with the sound, right? I remember way back in the day, it must have been, well, it was the summer of 2021, and we go live. There's like, back then we did regular daily live streams. So there's 1,000 people there live, and all of a sudden, all as you start seeing is thumbs down, thumbs down, thumbs downs. And I'm going at it. I'm like in a rift, and the flow is going so strong. And I'm like, what is going on? I realize 12, 15 minutes into the stream that, wait a second, I don't have any sound. That's why mic check has become a thing here at CTM. Nevertheless, how many times, how many times, how many times? Hope you're all well on this Monday. Right now, we're looking at Bitcoin trading just above six figures, $100,000. A lot of people concerned. Guys, massive geopolitical risk across the board right now. It could absolutely escalate. And if it does, Bitcoin is a high beta macro asset. And like any other, it is obviously going to be susceptible to any near term risk off moves. It's just not a risk on asset at this particular point in time. Don't worry, it's headed that way. Let's take a look and focus in on a lot today. Let's focus in on what was taking place in this particular area over here. And then we had that sharp sell off. This sell off was caused by, well, I think it was caused by Elon. And this is when Elon stopped embracing Bitcoin. And then the summer of 2021, we were able to see a sharp recovery, double top, barely taking out the high, and then bear market. Very similar situation in so much as that we have had a high over here, price then on lots of, let's say, macro driven um macro driven forces here, coming into a pretty strong correction, and price really quickly able to ascend to a barely a new all-time high. And a lot of people are concerned that what we're looking at is a double top right here, right now. And that's partly because of like PTSD, shell shock, right? It happened before. It was very recent in the last cycle. So of course people are on guard that it could happen again. Let's take a look at what was happening first in the 2021 double top era. Then we'll look what's happening right now in the 2025, the new landscape. And then we'll go ahead and we'll put together what it means. So, boom, guys. So I think today's important. I think we should address what's taking place. I just said that Bitcoin is a high beta macro asset, and right now geopolitical tensions are on the rise. As first, obviously, Israel had attacked Iran. Then the U.S. over the weekend, they attacked all three of Iran's nuclear sites, and Iran right now is putting out there the potential for a proportionate retaliation. Now, I have to hope and think that they're going to have some strategic clear heads here. And when they say proportional retaliation, I hope what that means is that they're going to go ahead and, save face, launch some missiles at some regional U.S. bases, which are, from my understand, empty right now. And then they had retaliated back, and then this thing moves forward. Now that might not happen. That that would be what would probably be the most benign outcome. And And that would be hoping then that the United States doesn't take that as an escalation, and then we see further, well, badness, which could happen as well. You know, so the situation is really has gone from bad to worse, and potentially could go much worse. All right, let's take a look at what's going on over here, and let's take a look at what was happening to begin first in 2021, and we'll look at what was taking place. So first, we're going to start off with monetary policy. Then we'll go into what was taking place as far as in the market psychology, and then the outcome. So first, in 2021, double top monetary policy. The Fed was still expanding its balance sheet, right? They were expanding its balance sheet all the way into the first quarter of 2022. So right now, monetary policy is obviously quite different. The Fed is obviously winding down their balance sheet. QT is still running. That's one difference that we're currently looking at. Rates in this time over here were near zero, and liquidity was abundant. And it was the tail end, right? It was the end of that unprecedented fiscal and monetary expansion post global lockdowns. And this was what we talk about, the bull of all bulls running monetary policy aligned. And if you remember, I remember, if you come back into 2020, and a lot of people, as we called the bull market breakout, were saying, what do you think is going to be the greatest risk to the bull market? And in 2020, I was like, the greatest risk to Bitcoin's bull market. No, it's not Tether. No, it's not another like a better Bitcoin. It's the Federal Reserve and their monetary policy. In 2020, I said that. Today, obviously, 5 years, fast forward, a lot of people are beginning to understand the impact of Fed policy and how it relates to Bitcoin. And indeed, if you looked at what happened, the Fed signaled something to us over here in October. In October 2021, the Fed signaled that why this ultra loose expansionary monetary policy was going on, they were about to end it, to taper it down. And if you remember, put out that tweet over here on the 16th of October, right after the Fed meeting minutes said that they were going to begin tapering. Said, looking at the macro, it appears that the Fed's coming policy mistake in 2022 is going to lead to turbulent and disorderly markets from a rate shock. Even today in 2025, people will tell you nobody saw that massive, strong rate hiking cycle coming into play. This is back in 2021, late 2021. Rates are near zero, and we're talking about a rate shock. Bitcoin, we're talking also about as we continue forward, right? Quicker, sharper, more violent cycles, monetary cycles, Fed cycles, I like to call them. Bitcoin is extremely vulnerable, not immune to this. The taper in December will confirm Fed's intentions. 2022, trouble ahead for Bitcoin. And sure enough, what we saw after that was a mega bear market in 2022. What we did see was the greatest risk to the Bitcoin bull market was Fed and Fed policy. That's a good sign. Um, if indeed, guys, let's check it out really quick, and then we'll come right back to the conversation at hand. I need to see what's going on over here. Let's pull up a chart of oil. And yes, indeed, I saw yesterday this post from this guy Andrew Tate. I think that's his name, the OG, and he's like, go mega long oil right now. Go mega long. This is the easiest trade ever." Guys, it's the markets. There's nothing easy about it. It takes a lot of work and it takes a lot of experience. I remember what happened in 2020. 2020, when Iran launched missiles into Iraq, oil spiked up intraday, and then boom, that was the top. all the way down to zero. All right. 2021. That's what was taking place. What's taking place here in 2025? Wait, there's more. Market psychology. That was just the monetary policy. What was going on in the market? Retail was absolutely euphoric. Is retail euphoric today? Right? Obviously, a lot of people were really, really euphoric, not only because of what was taking place in Bitcoin, but largely because what was taking place with their altcoins and their altcoin investments, which were doing quite nice, right? And that was because at that particular time, Fed's monetary policy was very accommodative. It's very helpful for altcoins and even ARK investments at that particular time, right? What else was happening over there? Obviously, leverage was rampant and institutional flows were just starting to engage, but they were not dominant whatsoever. Bitcoin wound up surging to $69,000 until inflation fears began to surface. The double top, it reflected the growing macro uncertainty and a liquidity overshoot, right? If the Fed had not pulled the plug, Bitcoin obviously and likely would not have topped. What you did see what happened, and here's the first hike. Over here in March is the first hike. And that then began the massive descent leg down on Bitcoin. Here in 2022, are things different? 2025, what's different and how different are they? Because glancing over at the price action, obviously a lot of people see a lot of similarities, right? They're like, ooh, double top with that just tagging the higher high. Double top just tagging the higher high. Hey, one difference though is that Bitcoin, right, in a very short time had made a very strong ascent. It's vertical. The price action was vertical over a few months. This time, price was coming out of a very long mega base, shot up, right? Made another leg down, retesting that broken resistance, becoming support and making a higher high. Structurally, it continues to look very, very strong. It looks very good at this particular point in time. We're always watching when that would change. We're always looking at price action. We're always looking for invalidations, right? And Johnny, such a great question. I'm going to go ahead and highlight that, come back to that, or maybe even pick up that specifically on tomorrow, and give you a brief view of what that looks like today. But anyway, let's keep going. Um, what else is taking place right now with in 2025 as far as the monetary policy? This is really important, right? So the Fed had, rate shock has tightened aggressively and is only now considering cuts, right? Obviously, there was a political cut ahead of the election. And then after the election, they've been on pause. Markets right now pricing in 1 to 2 cuts this year. That's all variable. By the way, as we look at what's taking place with oil, and you see oil spiking up. Let's just back up to that oil chart. See oil spiking up. And if you take a look at what that means here for inflation, remember, this is ever since oil started spiking up. Oil is an energy, obviously, is a really big factor into what takes place as far as these near term. When I say near term, what's gonna with the inflation readings we're gonna be seeing over the next month and or two. And if current situation does continue to escalate, obviously oil before it ultimately winds up putting in a top and then coming back down to test the range, is gonna it could go higher from here. And if it goes higher from here, we could be seeing reason for the Fed to say into the end of the year, listen, we don't feel that we've met our mandate, and in light of the higher upticks in inflation, we're going to go ahead. We think the job market does remain robust, and we are going to continue to wait and see. That's very real. That could very happen. This gives Powell almost a little bit of cover to stick to the stance that he wishes to take. So that's obviously a risk that is new that needs to be incorporated into how we view the market and what happens next. Um, so the Fed has tightened aggressively and is now considering cuts. By the way, when I talk about the cycle high, when I talk about the cycle high, Johnny, here you go. Here's a major invalidation level, de-risk level of this. And we've been following this one, by the way, ever since the bull market breakout. And it came very close to breaking down twice. First, it came, well, not so close, but if the Fed did not stop in March when the US regional banking crisis was taking place, that bull market breakout could have been tested. If you look forward to over here, this is a major, major event, the summer of 2023. If the courts did not rule in favor of Grayscale being able to roll over GBTC into a spot ETF, then it looks like there was a strong chance that we could have seen an invalidation of the bull market. And going any time further, that would be a really important de-risk level. It's never happened before. If you look, well, I guess you could say it did. Here was a major de-risk level. This was coming into the global lockdowns, right? Could one argue? Should one argue that if the world did not go into global lockdowns in 2020, that Bitcoin would not have obviously come off 62% or anything close to it, that it would have held this level, this line that I'm drawing right now, and that coming into the halving price would have been a little bit higher. Absolutely. All of those things. That was a variable that could not be pre-seen into one's forecast. It's why we put the work in each and every day to stay ahead. This would be a major de-risk level. I I imagine that that line does not break, and if it does, that's a major de-risk level. What else was I? Why did I originally go here? It's very important. I don't know. We'll come back to it. We'll come back to it, guys. If you are here and you're new, welcome. If you're not, welcome back. Take a moment, do hit the thumbs up button. And if you're not yet subscribed to the channel, do subscribe to the channel. The balance sheet runoff continues. Remember, we talked about in this area, we were looking at balance sheet expansion. We are currently seeing balance sheet runoff. QT is underway. Now, it's almost finished. They're down to just $5 billion a month right now, and likely the next step in the Fed cycle is to stop that QT. That's going to be a very important factor. Oh, I know what I wanted to talk about. I wanted to talk about the rate cuts, and when I talk about that the high of this cycle is going to be a lot closer to the 2028 having than the 2024. Do you remember a lot of people, they thought coming into this cycle, left translated cycle, the cycle top is going to come a lot closer to the 2024. And very quickly, very clearly, I saw what was a massively important signal. Bitcoin making a new all-time high ahead of the halving, that signaled a major change in the adoption rate, structural adoption. And you saw obviously here now that institutions are here. I've been talking about and even posted today very briefly. Let me go ahead and see if I could pull that up. Today we saw a publicly traded company, a 5G semiconductor company, Sequans, buying $384 million worth of Bitcoin. I was like, all of these sub 1 billion purchases, they're the new retail of this cycle. You heard me saying it a year ago, and at that point in time, people didn't understand it. They're like, well, the Google chart for Bitcoin searches are just they're down, and I'm like, that doesn't even matter. People checking Google searches for Bitcoin as a sign of retail here, it doesn't matter. Early majority adoption phase should be clear to everyone now. I know it wasn't a year ago, but it should be clear. Dynamics have shifted. By the way, this is just today. This is just like today. And this happens on a weekly basis and regularly, we see that ProCap BTC is going public via a SPAC merger with Columbus Circle Capital. They are aiming to raise, prior to going public, $1 billion. That's insane. Backed by three-quarters of $1 billion raise in equity and convertible notes. That is the largest, I believe, raise prior to going public for a Bitcoin treasury company. And look, I guess they're on the borderline of being retail and something that would be, you know, this is retail to me, a $300 million purchase. This is the new retail, I should say. When you're talking about a billion and above, those are some bigger numbers. Jumping back and getting over to here, and the reason I say that the cycle high will be closer to 2028 having than 2024, obviously all the left translated folks, I mean, sorry, thanks for playing, is because as as the Fed continues its Fed cycle, when you get to the portion of the cycle where they begin to rapidly cut rates, that usually puts a lot of stress on risk. Bitcoin is not immune, and depending on what's now, is it possible the Fed will begin cutting next year into growth? It certainly is possible. If the Fed is cutting into growth, the cycle is going to be extended even further. They want to extend the cycle as far as possible. They're not in a hurry to have to come in and do a major debasement, because every time they do, they lose trust and credibility. It becomes a lot clearer to everyone the game that's taking place. They want to go ahead and continue to push this cycle as far as possible. You can have cuts by the central bank, by the Fed, and that could be very beneficial to risk. What matters is if they're cutting into normalization or if they're cutting into a slowdown. We don't know what happens. So that is why I go ahead and I say, by the time we get over here, monetary policy is likely going to be aligned and the bull of all bulls is really going to be running. So what else was taking place? We see that, first of all, QT is taking place right now. Bitcoin at new all-time highs as QT is taking place. The last time QT was taking place was in this area. This is a major difference. This is where QT was taking place, and this is where it stopped right here. Sorry, right here in September of 2019. And when it stopped and the balance sheet began going the other way, you could see that was really beneficial for risk until a crisis developed. Again, if that crisis had not developed, likely Bitcoin would not have taken, like, we would have held this trajectory, and coming into the halving, everything would have been a lot, obviously better. There is a substantial chance that once QT stops, and therefore, and likely the balance sheet begins going the other. Now, it's possible they stop QT and just pause, like they're not adding to their balance sheet, but likely that's not what's going to happen. Right now, we're also looking at global central bank split, right? China has been easing, and China's been feeling a lot of pain in this slow motion deflationary burn. We're looking at the ECB, and they're dovish. They're cutting rates. The Fed is super cautious, and the Bank of Japan, they're actually hawkish. They're raising rates. I mean, they're trying to raise rates. They've been raising rates. They're a little bit on pause as well. They would like to raise rates, but we're not looking at central banks that are all aligned into outright easing. Much different scenario. And again, Bitcoin over here during QT was not anywhere near an all-time high. It was over 50% off. Bitcoin with QT in full effect had made a new all-time high. It's a massive structural difference. A lot of people are caught up on 4-year cycle behavior, thinking that it needs to match. It's going to rhyme, but it's not going to match whatsoever. We've seen some significant changes and difference in the structure. What was going on in the market, right? So right now we're seeing major institutional dominance is growing. We see ETFs, I mean, what last I checked, it was something like $42 billion into the spot ETFs. Treasury allocations, we corporates continue the rate of adoption at a more than suddenly pace. Going back into this area over here, this was when, strategy, microstrategy held their first corporate event. And I mean, there now it's just every day almost it seems that a new corporation is going ahead and they are taking Bitcoin and adding it to their treasury. What else is taking place over here? Sovereign interest. Yep, we've seen some sovereigns take positions into the spot ETFs. Obviously, through that institutionals, we've seen different state and local governments taking positions. There is the Bitcoin Act that is being proposed for US lawmakers to vote on a national level. And like we see the corporate rate of adoption continuing to grow. Once a major nation adopts Bitcoin, someone inside the G7, it's on at that point. Then we'll begin to see that portion move, and then suddenly I don't really know that. I mean, obviously, there's much less supply on exchanges than there was back 4 years ago. I don't know how much of a factor that is because there is Bitcoin on exchange, and not only that, the higher price goes, obviously there will be willing sellers to provide Bitcoin on exchange. But one major, I think, extraordinarily bullish factor that we are seeing is the distribution from OGs into these new, we call it strong hands. A lot of these corporate treasuries that are accumulating Bitcoin, a lot of these institutions, they're not doing it for the short term. They're not doing it from one cycle, hoping that price appreciates and they could sell it and then go ahead and time the market. They're looking for the long term, and we're seeing a healthy distribution taking place. Not only that, as that continues, and you see a lot of Bitcoin moving from older wallets into these newer, I'll call them strong hands because of their time horizon. What's really bullish about that is that you're seeing a dwindling of supply that will be available from over the counter Bitcoin. Forget on exchange, eventually, and it's going to take a while. Eventually, that will become more of an equilibrium, and then there won't be as much over-the-counter Bitcoin available as the demand is. That's when things will get very exciting. I have no idea when that is going to come into any type of balance to cause that. Obviously, retail is nowhere near as euphoric or in mania, or I would say, or using excessive leverage in so much as that. Well, I mean, whatever this guy on Hyperliquid taking out, 100x positions, that's excessive, but that's one guy, right? We are seeing, unfortunately, probably a lot of people thinking about and looking into Bitcoin lending. And remember that one? That was the D-risk 53,000. And that could, people are putting Bitcoin at risk by doing that. Different conversation, but it was rampant back into late 2021. And again, there's just some warning signs right now. Obviously, retail, unfortunately, a lot of retail, a lot of our friends, like a lot of people obviously are stuck in all coin positions that haven't yet worked out as they would like. There's no euphoria taking place whatsoever. Cycle dynamics, right? I pointed out that Bitcoin made the new all-time high pre-halving. Major difference, a break, structural break from prior cycles. It suggests that early majority adoption is in motion, and this is not just another speculative boom. Remember, it was over here in December of 2022, January 2022, right here, where I put up this chart and talked about the new phase, saying, listen, as someone who's embraced the 4 year cycle, what just happened is different. And then because I realized that something was different, I had to go ahead and I have to reevaluate what I thought was going to come and transpire ahead. Sure enough, it seems that this is becoming a lot clearer to people every day. The first time I posted it and put it out, forget 2022, no one was ready. When I've put this out months ago, people still were not ready. Now I'm seeing a lot of people realizing, okay, the cycle high is going to be a lot closer to 2028 than it was. Um, where does this take this? What does this all mean? So let's just go back to 2021 top. It was definitely fueled by speculative excess under loose monetary conditions. Today's strength is happening despite Bitcoin here, despite tight monetary policy, arguably much more structurally sound. And if and when the Fed turns to dovish, right? When they start cutting and stop QT, when they move towards pausing QT, and my speculation is that balance sheet expansion will begin at that. But Bitcoin could begin to enter into its strongest macro tailwind, institutional demand, returning retail, and looser the bull global liquidity. The bull of all bulls will be running once again once that happens. I like to look at this. I think this is a great way to illustrate what's taking place right now. And isn't it great? Do you remember in 2021 how we would line up all the past cycles of Bitcoin, look at the deviations, and look for some direction? Now, again, back then, nobody embraced that. Here today, lots of people embracing that, and it's great because it provides for some good framework and charts over here. And the green line over here is pretty much the floor that should not break. A lot of people continuing to look for something like this for Bitcoin to start and to move into some type of euphoric upward launch. If we see the passage of, for example, the Bitcoin Act, if the US begins large purchases, 200, 100,000, 200,000 Bitcoin a year for X amount of years, triggering nation state of FOMO, we could see actual some type of launch of Bitcoin's price. Outside of that happening, I think that it's a lot more logical to think and a good place to have of what projections would be if you were. And I'm going to forget. This is what's important as we get into this zone right over here. How we get there, I don't know exactly what that looks like, but I think there's a much stronger chance than Bitcoin outside of the one variable I just talked of moving into a euphoric phase of being able to in this area over here into the spring and fall of 2026, if it's in this area, if it's in this box. And I would like to think from what the 4-year cycle mean is, the line that's highlighted, the boulder line, and above, that is extremely right on time and extremely bullish, and then likely sets up a move into as we get closer to 2008 and into the fall and winter of 2008. If we could be in an area like this, that right there would just be the ultimate bullish outcome. And I think there's a really strong indication that both of those things happen. Right now, I'm more focused on over here. I think this is pretty far away. It's over a year away. We're about a year away. I think that my projection is that we don't see something. No, something that looks like we've seen in the past, and we see something more like this transpire. If we do, that is exceptionally bullish. All right. What else is going on? God bless you. Thank you so much. That's beautiful. Thank you for being here yourself. Um, let's take a look at what's going on right now in markets. And oh, there's one view I did not give you that I want to give you, and that's just a look like this. This is the bull market invalidation line that we've looked at. This is a little different view. It's a much tighter. I again, here's the one I just showed you, the bull market invalidation line, and that comes off of like this, and that's like that. That's mas bueno. That's correct. But we're currently seem to be in this channel over here that I'm currently looking at, and we've had two touches to the support, three touches to it. We've broke down, came right into pretty close. I mean, expectations we could have gone a tiny bit lower, testing that support, testing that resistance, confirming it as support, and more importantly, it wound up being a liquidity grab, meaning that this breakdown was nullified, and then not only that, was able to make a new high. And then you can see that, well, it's being tested again, and so far holding looks pretty good, right? I like to consult multiple multiple vantage points. This is one that I look at. If we do break down from here, then yeah, I think that this would be like, this is not a de-risk level for me, but this would be a near term, very short term time horizon. Bitcoin likely is going to be under deeper pressure, and we're going to have to look for it when that first recovery comes. I hope that's very clear. I try to be as very clear with everyone as possible. Look, you can see resistance confirmed as support. Our structure tested again. Okay, looks good, right? If we break down from that, then yes. What is this line? I don't even know. Okay, I don't even know what that is. That's my mouse. I'm like, what is that horizontal line? Bitcoin continues to be, right? A lot of people look at this as a head and shoulders, an inverted head and shoulders developing. Some people look at it like a cup and handle. I look at it like, here's a trend line that you can see that one, two, three. It's not double top, right? It's slightly sloping upwards. And when we break out from that, that's when it will be really on. So far, I mean, obviously, world right now under massive geopolitical risk and tensions, and Bitcoin was, of course, and clearly not immune as we would expect. But so far, continuing to hold up and look very, very well. Cardano is the only position that we have right now, and Cardano is short. Currently, definitely 20% unrealized gains. Very nice. Now, that has to do with a couple of things. It has to do with, obviously, like you could see that and by the way, Ethereum just took a short attempt and then stopped out. Here, Bitcoin bull runs continues to hold its position. This suggesting that upside momentum could continue. I'm trying to get to, there's Cardano continuing to hold, but Ethereum here tried the short side and then took a quick stop. Currently out of the market, and the only position we have is Cardano. Cardano short here, and the other thing it has to do with, again, I was saying, like, look, obviously, if you look at near term momentum, 8 hour swing trades, we're not in any positions. And we saw an attempt on the short side of Ethereum. We're seeing signs of near term weakness, and Cardano is a great barometer of that. And you can see that it's very early into the market. The other thing is that its founder is talking about selling a bunch of Cardano to buy Bitcoin. And I imagine that is contributing to the weakness as well. Our stocks positioning, T triple Q continuing to hold a position just under 10% into profit, and Nvidia continuing to hold a position right around break even. Tesla looks like, and so far the price action of Tesla seems to be favorable off of the launch of the robo taxis. You could see that we are just waiting on the CTM filter here as we've crossed above the zero line, and we could potentially have very soon a confirmed long entry on Tesla. GBTC, this should be on IBIT. This was the We're not close. I guess this is to have the history. Um, MicroStrategy remaining right now out of the market as well. Ace began taking a look at some of the work Brownie Brown had contributing to. I think we have it right over here. Here we go. Started contributing to, this is also on V2, some of the work that Brownie Brown has put out, seeing if he could go ahead and add some fine tune to that. So very easily and quickly, we're gonna go ahead and get out the micro strategy template, the micro strategy template to Brownie Brown's magic, touch to that. And then we'll wait and see whether or not Ace is able to do anything as well. But doesn't see, I think Ace is working on V3, V4. And just like a quick update, I wanted to show you what was happening with V3, V4 on this. First of all, Solana short. We use the short side on the V4 candidate. We're not seeing anything happen on Bitcoin. It's just out of the market, same as we are out of the market. You saw that Ethereum also took a short trade here, but it was able to get out almost at break even. So that was, I mean, I'm looking forward to the V3, V4. And then Cardano here, we're holding a 20% open trade. Look what Cardano did. This is a major difference. Okay, well, it just took a loss. It did, but look at this. The whole way down over here, starting in from June 12th, when it's started, well, I guess it started the short side. We'll omit this one over here. On this last short move down, it's taken 5%, 5%, 5%, 5%, 5%. So 25% plus minus the 3, we're holding open 20%, but this has been navigating absolutely phenomenal. So that's just a little bit of the forward test. How we viewing the stock market right now? So the best way to view it is from our positioning, right? Because look, you saw, or I've seen things like people out there who were zero allocated to stocks, and then stocks corrected 30%, and then stocks recovered 30%, and they're still 0% allocated and just waiting out on the sidelines. And that's great unless we make a leg up, then they're going to be left behind. We're very fluid in how we could go from a full allocation 100% and down to zero. So on that whole move down, we went from fully allocated to 0% allocated. And it's much more fluid way to approach it. But let's talk about what's going on in stocks as well. And let's start over here. So I guess this is the one thing that's concerning to me. So DeepSeek low, once broken, recovered from. We are able to see the wedge that broke down, neutral, break down again, finally breaking out. This is when we were tactically long as far as technical, and looking and waiting and watch what happens. But you could see that much like Bitcoin has that upward sloping, this has a downward sloping line. I like the downward sloping better, but look, price needs to break above. And if it's not able to, eventually that becomes concerning. It could break low. I like looking at this chart here. This is seasonals. And you could see that we are entering into a period right now, which is not favorable, right? Near term. Coming out of this period, it becomes very, very, very favorable. So, I mean, we have lots of things happening. We have, from a flow perspective, we have a lot of corporations going into the blackout period as far as their buybacks. And that is, we have that big bid into the markets is going to be diminished. We have, from a macro perspective, the upcoming deadline of the tariff pause. And a lot of countries don't seem to be happy with the terms that are proposed, and negotiations don't seem to be going well. Now, what's going to happen? We're going to find out very soon, but this could be a near term headwind. If you do indeed see, and you could see some favorable outcomes even this week, like A deal with India could be announced at any time. Japan seems to be not very happy with its terms. I think it's worth mentioning also, though, that it turns out that Japan has drastically reduced the prices of their cars being exported to the United States. Powell told us that the U.S. consumer was going to eat the tariff. That's not what the data is suggesting, and it's very possible we could see a doubling down after the due date for the tariff pause, and we could see a very high number of tariffs go into effect. I don't know what the ramifications will be. That's definitely something market might not find favorable. So that's just major uncertainty coming to a headwind very, very shortly in the next couple of weeks. So and it lines up with the seasonalities as well. So could we see some pressure? I imagine so. If the market is able, talk about climbing the wall of worry, if the market gets through this period of seasonalities and also this macro headwind of uncertainty that's coming to a potential major inflection point, that would, I mean, I don't imagine it does. I imagine we see some type of correction that aligns pretty closely with the seasonalities, right? But if it does, that's a major signal about the resiliency here and what's taking place. So that's something for us to watch. We have Powell testifying tomorrow and Wednesday, and then we have on Friday we get core PCE, the Fed's favorite inflation indicator. So it's a big week ahead. The dollar looks like it's under a little bit of pressure here. Let's take a look at the dollar first. Yields right now, uh, continuing to be, well, yields are bid today. They were more holding a line of consolidation that was a like this. It looks like maybe they're expanding downwards, and then maybe we have some type of pattern like this or further downside pressure. My expectations longer term are that ultimately this major coil that we're seeing is going to wind up breaking out to the upside, which may be a very good thing because ultimately it could lead then to a liquidity grab, taking us all the way down. I'm wrong if we break this line over here at that point, then my view of which way this is going to break is obviously very long. I have this secondary confirmation down below. We are seeing inflation slightly rising here off of that elevated oil. The dollar broke out from this since February, touch in March, touch again in May, June, finally breaking out into a buy impulse and coming in for the retest right now. We flip down, short down if we break below over here at any point in time. This I just started working on this morning, so I can't present it. But I just before going live, so I really can't present it. But I don't know. There could be this could ultimately even be a really strong filter for our stocks on the daily. Give me more time, and then I will be presenting what's going on. How to do over here in the 2017 top. So macro conditions, financial conditions. Uh, this is uh, this is incorporating move, incorporating high yield, and incorporating corporate debt. And you could see that. I mean, is it late? Maybe. Definitely protected from the gap down over here into the top of 2021. What was happening? I mean, it's a pretty early signal. This one though is green for this move down. I don't like that. And then for sure, again on this major move down, conditions were not favorable. Definitely called the rise out of it very well. This was the FTX drama. So very, very, very. Anyway, I don't mean to. I want to spend more time and I have a good feeling though. I think we might be onto something. So I like that. Here's another look at the dollar. Came into that overhead of resistance, actually was rejected so far. We need to see a nice recovery here, kind of breakout retest in effect right now. This is where we're wrong on a close below that. And then that's it for today, everyone. Whoop, whoop, whoop. Beautiful ace. And so the great thing about that is we could still get out V2 relatively very quickly for the micro strategy. Love the current micro strategy, but and then look forward and into when V3, V4 comes out. Everyone, bonds continue to be coiling inside. The, remember, we had that buy impulse trigger and said, well, we could come all the way down and test much lower in the range, but unless it breaks down, right? Then my assumption is we are still within the range. Everyone, have a beautiful, beautiful, beautiful day. God bless you, and I'll see you all tomorrow.